Even though the NASDAQ had its 5th consecutive day of going up, I believe that we still have plenty of headwinds left to invest in dividends. And as a dividend investor, I have the best 7% dividends to buy now. Invest with me to retire early. That is what we're doing. We have a very interactive video for you today, and I wanted to show you my portfolio updates, what I'm buying, a little bit of stock market news, some metrics I look for, and what are the 2 stocks I bought because I did reinvest my JEPI dividends into 2 specific stocks. So I just wanted to talk about a few things, update you on what I'm buying, because as far as macroeconomics goes, I want a recession-proof investing portfolio. So I want to see companies that are consistently increasing their revenue. I want to see companies that are increasing their dividends and that are paying out their dividends to dividend investors. I don't want to see any cuts, and I want to make sure that it is sustainable. I also want to make sure that they have low debt to EBITDA, so they don't have a lot of debt and they can pay off all of their debt. So I just wanted to talk about that as well. But I would also love for this to be an invest with me where we can all invest and we can all make a lot of money so we can be future millionaires. So I have a link in the description below for the way I track my dividends. If you would like that, it's completely free. It's the link, the first link at the bottom. So to get into my portfolio and my portfolio update, we're currently at $48,651.58. Now you'll note that I have mostly monthly income ETFs in here. So we did get a nice dividend from JEPI, and that is about 23% of my portfolio. So we got some nice dividends as far as that is concerned. Now the dividends we got were $128.06. I was very happy when I saw that. And you'll note that also QYLD is my top position. It is 30%. And since we had 5 consecutive days, my overall portfolio has gone up. So we're still at a loss, but the S&P 500 is at a loss, and it's actually beating the S&P 500. Now, this is a portfolio that is a mix between high yield dividends and dividend growth. So you will see a lot of dividends in this portfolio. I'm trying to get to $1,000 per month in dividends alone. So that is the main goal. It's not necessarily seeing the stock price go up, but we would of course like to see that capital appreciation. So earned dividends so far, we have $2,852.94, and QYLD is in the top position, and then JEPI is in the second position. As far as a few dividend stocks are concerned, Altria and the whole Juul debacle, they actually have 35% investment stake in Juul. What happened this week was basically the FDA just said, you know what, we're not going to take this to trial right now. We're not going to worry about this. So Juul can continue to stay on the market. But as I explained in a previous video, this really is a non-concern for Altria because management is absolutely excellent, and they are taking the measurements per their contract to take their own vaping to the market if necessary. So they are taking the necessary steps to make sure that they get the revenue that they need to. And also they have been writing off Juul's business for a few years now, and they only have about $3 billion left in write-offs. So it is a very little portion of their balance sheet, and it really is a non-concern for Altria holders. They are trying to go into a more sustainable model right now, and I do have a few things I want to say about Altria. So that's a little bit of a teaser of one of the 2 stocks that I decided to buy. But we're seeing a lot of interesting price targets. We're seeing a lot of price target increases and price target decreases. So we had Johnson & Johnson, which was a price target decrease, and then we had AbbVie, which was actually a price target increase. So I believe a lot of the analysts right now are just a little confused about where the economy is heading, especially since Powell is now talking about the 75 basis hike that, he's okay with doing. He's okay with rug pulling us. That's what he's talking about right now. He says that he just wants to make sure that inflation has peaked and inflation is over with. As long as dividend investors, as long as we maintain a bulletproof and recession-proof portfolio, we should be fine. We should be tracking our dividends. We should be seeing that our dividends are going up on a year-over-year basis. We don't need to care about month to month because dividends pay on any day the company decides. But we need to make sure that on a year-over-year, we are reinvesting. We are putting more money into our bank accounts, and we are choosing companies that we believe have a future and we believe are sustainable in their dividend payouts. I don't really care about what's going on in the economy. Now, of course, if it's like the fall of Rome or something like that, then yes, we will have bigger problems than the actual economy going down. But what I like to do is look at my specific dividends, look at my specific ETFs, and make sure, can they withstand a recession? Can they withstand this market turmoil? And if they can, I am very happy to put my hard-earned money to work. So that was a little rant on dividend investing. Now, for a little bit of financial drama on YouTube, if you haven't heard Everything Money and Jeremy from Financial Education, they have been going at it. Everything Money are value investors with Paul, and Jeremy is a growth investor. And yesterday they were calling for $1 million challenge where Paul would essentially create his own portfolio and Jeremy would create his, and it would all go to charity. They would invest for 10 years, see who wins. I thought that was awesome, but they're basically just going back and forth. They both don't respect each other's investing style. But what I was thinking was, well, we have the value, we have the growth, but what about the dividend investors? If they are going to do that challenge, I personally am going to compare my dividend portfolio, and you will see that in the link in the description, and I'll give you weekly and monthly updates. I am going to compare my dividend portfolio because I feel like it is missing something with the value and the growth competition. We need those dividends in there because the S&P 500 total returns are 40% dividends. So you cannot tell me that dividends do not have a place in investing. A lot of high yield dividends have actually beaten the S&P 500 in 10 years. If we can do that for the next 10 years, we are good to go. So if you would like to see a portfolio update of all of my holdings, that will be in the link in the description below. It does seem a little silly what they're doing, but also highly entertaining. I think they're great people. I don't curse, so the rant was a little bit too much for me to listen to. But what I would like to say, if you are a dividend investor or if you are a beginning investor, whatever your strategy is, whether it's dividends, whether it's value, whether it's growth, you need to have your own strategy based on your goals. You need to have a strategy that's based on your risk tolerance. You need to have a strategy based on your time horizon. That will give you the returns that you're looking for. Now we have Warren Buffett, Manish Pabrai, Peter Lynch. We have all of these great investors, and they all had different strategies. If you are a dividend investor or if you are a beginning investor, what you need to do is really, really research each company, research all of the different strategies and see which one fits you, your personal taste, what you want to do. I love dividend growth and I love high yield dividends because I want that passive monthly income. I want to be able to retire in 10 years and do whatever I want to do. So that's what I personally love to do. But I think with this challenge, everybody can learn that we all have different strategies and it's okay. It's okay as long as we learn from them and grow from them and find the strategy that best suits our needs. What I recommend for investors, and this is not financial advice, this is purely for entertainment only, what I would recommend is to simply invest in the S&P 500, SPY, VOO, low-cost index ETFs. Just those two. That's it. And then learn as much as you possibly can about dividend companies that you might be interested in or about a strategy. And then come up with a plan of what your portfolio is going to look like, how long you're going to be invested based on your life and your lifestyle. We all have different strategies. I'm just here to give you a few tips and to show you what I'm doing to try to get to $1,000 a month. Actually have a plan before you start investing into individual stocks or individual ETFs. As long as we have a solid strategy, we can all respect each other's. We don't need to curse at people, and we don't need to follow anybody else's advice. I wanted to talk about my portfolio and a little bit of the updates and what I actually bought. So we have JEPI, and I basically bought $14 of JEPI, which is obviously not a lot, but I feel like I have enough exposure to JEPI that I don't need a lot more of that. So I wanted some more dividend growth. I bought $50 of Altria and $50 of EPD, and I bought $14 of GOF, which is the Guggenheim Strategic Opportunity Fund. That's a close-end fund. We won't get into that one too much today, but Altria is one of the 7% dividend stocks that I bought, and according to the cash flow, they're expected to report cash flow of 4.5% this year. They've generated cash flow of 7.3% over the past 3 to 5 years, which I feel like is very impressive. Now, we talked a little bit about Juul, but what gets me excited about them is they're kind of pivoting. So given the rising health consciousness and stern government regulations to discourage smoking, they're moving beyond traditional cigarettes and expanding into the smokeless category. Now, they have their own smokeless category in vaping, and they're doing Juul as well. Revenues from the oral products category have been steadily rising on the back of growing popularity for reduced risk products. Altria is gaining from the sale of IQOS in the United States through its licensing deal with Philip Morris. So that's very good revenue. It's one of the best defensive blue chips. I just believe that the outlook remains unchanged. Management is knowledgeable and they have been doing this for years, and it actually is a Dividend Aristocrat, which means that they have been increasing and giving out dividends for the past over 25 years consistently. This means that they did not cut the dividend in 2020. So analysts are actually expecting Altria to hike its dividend about 7% in August, which honestly, I believe that there was a lot of FUD going around because they are expecting a dividend hike and this is undervalued. So I think market makers were just wanting to send out bad news right now to make sure that they got in at a better price. This would create a potential 8.5% yield and 13.9% long-term return potential, which would help with early retirement. What I also like about them is that they're reducing risk with product launches, they're cutting costs, and they're buying back their stock. So I think it's very well positioned to move forward into the vaping business. They are getting rid of a lot of debt and they have been paying out dividends that are sustainable. I really like this dividend. It's a dividend growth company. I would personally say it's a high yield dividend and it fits within this portfolio. So the next one was EPD, and we bought $50 of that as well. This has a stable business model and is not significantly exposed to oil and gas prices, the volatility of that, but it is in the oil and gas space. It generates stable fee-based revenues from its extensive pipeline network across nearly 50,000 miles, transporting natural gas liquids, crude oil, petrochemicals, and refined products. The midstream infrastructure provider also has storage assets that can store roughly 260 million barrels These assets can also store 14 billion cubic feet of natural gas. Enterprise Products has $4.6 billion of major capital projects under construction that are likely to provide incremental fee-based revenues. They have lower debt exposure than their other stocks belonging to the industry, which is something that I really like. This is a very good dividend growth stock. Its debt to cap ratio of 0.53 is lower than the industry's 0.55, and it's persistently been lower than the stocks in the industry in the past few years. What I'm looking at is their earnings specifically because the estimate revisions for 2022 and 2023 in the past 30 days have been on an upward trajectory. The second thing that I love about EPD and why I decided to buy this behemoth is because they decided to increase quarterly cash distribution, or their dividend yield. So for the second quarter of 2022, it's going to be 47.5 cents per unit, representing an increase from 46.5 cents in the prior quarter. It will be paid on August 12th to common unit holders on record as of close July 29th. So I wanted to get in before the dividend raise. This will be the 74th distribution hike. Also, for the consecutive 24 years, the company has increased its distribution. So this, mark my words, that this is going to be a dividend aristocrat because they have been handing out dividends for 24 years. They're so close. They're on the cusp of it. Along with the distribution hike, they're actually also repurchasing $35 million of its common units in the June quarter. I'm just very excited about that. That just means that they're buying back their own stock. And a few of you were asking me why the dividend stock price drops after the stock goes ex-dividend. And that's just because it typically drops by the amount of the dividend paid to reflect that new shareholders are not entitled to that payment. The shareholders that were previously in that got the dividend, they were paid out that dividend, and then it was subtracted from the stock price just so the shareholders afterwards wouldn't be entitled to that dividend. So now that you can see the portfolio, you can see that JEPI is a 23% exposure. And what I love about this is that they have a 7 to 8% dividend yield, but they also are recession proof. So as I said, I don't really care that much about the macroeconomic factors. Basically, what management does is very great, and you don't see a lot of capital depreciation like you see with QYLD. Now, I have JEPI 23% exposure, and QYLD is actually a 30% exposure. But what I'm doing is I'm just leaving those as is and investing just a little bit into JEPI. I decided to resell a little bit this week, so I'm hoping to get a good income for next week, but I just wanted to show you a little bit of my reinvesting and what I'm doing. Now, what I'm selling or potentially selling is IEP, which has a massive dividend of 16%. But as you can see, I'm up on it and I see that it's reaching a level of resistance and it looks to be a bit overvalued for me. So I'm not really looking to expose myself anymore into that one. And I might want to get into a better price, but I would have to reevaluate. Now, I'm definitely going to buy more shares of Altria next week and more shares of EPD. I would like to buy a little bit more of STOR because I'm expecting a dividend increase. And then ARCC, I just need more exposure to that as well. So basically what I'm doing as a dividend growth investor and high yield dividend investor is what you see in this portfolio. I just wanted to show dividend investors how much cash flow you can get monthly from high yield mixed with dividend growth. So you'll see that in here. What I'm trying to do is rebalance a little bit more into dividend growth. We want to balance it out a little bit more. So you'll see me do that in the coming weeks and coming months. Let's go over to the tracker and see what we can track. This is the free template that I have in the link in the description below that I've been using for a while now. So what I like to do is do full shares and not partial shares. I kind of feel like that's cheating. So I only have the full shares up here showing the total dividends and total gains. We're going to add 1 share of Altria, and then we're going to add a row for EPD and put in 2 shares. And then for JOF and for JEPI, I'm not going to put anything because they were partial shares that I did in my M1 finance portfolio. And you'll see total dividends have changed and annual dividend. Now, I don't really look at the annual total. That's not really my goal right now. So the total dividends are annually. So I would like those to be 12,000, and we're getting there, but we have a lot of work to do, and it's going to be a little bit slower now that I'm doing dividend growth instead of a lot of high yield dividends. So let's go back over to the graph, and we are going to go with date and dividends. And this is the quick monthly dividend tracker that I use. I love this because I can see exactly how well I'm doing and if I'm actually moving forward and moving up and onward. So we are going to put for July 128.06. And you'll notice that it's much lower than the other ones, which of course it's just the start of July. So hopefully there will be a few more dividends. The dividends are all over the place, but I like to go year over year and make sure that we are on an upward trajectory with reinvesting, with putting it in money, hopefully next week. With capital appreciation on my dividend growth stocks, we should be seeing an upward trajectory and we should be getting more dividends as time goes on. So far, I had my best month yet in July, which was the last month, so I'm very happy with that. We did get $529.24, so I'm hoping for something around the range of $200 this month. Because my monthly income ETFs, they kind of doubled down last month. I hope you enjoyed this portfolio update and the best 7% dividends to buy now. I'm trying to retire early in 10 years and I'm trying to get to $1,000 a month. This was Invest With Me. You can get the template below so you can invest and you can track all of your dividends the way I do. It's a pretty easy process once a month. Once you fill out everything, then it only takes me about 10-15 minutes monthly to update, if that. It takes me less time than that. I just wanted to let you know that you can make passive income and you can retire early with a high yield combined with dividend growth portfolio. That's what I'm trying to help inspire you to do. And once you see the compounding effect and see the snowball effect, it really does help to motivate you. And you'll find it very addicting. So please leave a like and subscribe and comment below what stocks you're buying. I'm buying Altria and EPD. I love each and every one of you. And this is Supergirl Investor here to save the world and make you wealthy. I want you to be financially healthy. So I wanted to give you a few more tips in this video. And I just wanted to explain a little bit more about my process. I love all of you and I will see you next week. Bye.